Welcome to the Salmon Runs YouTube. Enjoy the video.
You start by confirming the prerequisites. Make sure your account is funded with the exact dollar you will risk, understand margin, and check instrument liquidity. Next, pick the specific market and time frame you will trade. This matters because liquidity and spreads change the odds. Once done, clearly state your objective, scalp, swing, or long, and set risk per trade as a percent. Finally, write down entry conditions and initial stop placement so you can act without hesitation. Now you execute. You scan for your predefined setup using price, action, and volume, and you verify any indicator only as confirmation. When the entry trigger fires, whether a breakout, a pullback into value, or a reversal candle, enter using the order type you planned. If unsure, use a limit to control slippage. Make sure to size the position to your risk percent and immediately place a stop loss. As the trade runs, trail stops or scale positions according to your rules to lock gains. Finish by executing your exit plan. Take profits at per-plan targets, use partial exits at 1 to 2R multiples, and trail stops when momentum is strong. After the trade, record the full journal entry, why you entered, what happened, and what you will change, because learning compounds returns. If trades consistently fail, troubleshoot by checking your timeframes, sample size, and whether you are over-leveraged. Adjust risk sizing and return to backtesting before scaling up, so you fix root causes rather than symptoms.
Thanks for watching. Consider subscribing if we helped you.